Today we're going to talk about, arguably, the best way to give money to charities while also maximizing the tax benefit for doing so. I like to ask wealthy families, would it be nice to get money out of your IRA totally tax-free? They all say that'd be great. Well, you can do that by doing a qualified charitable distribution, or QCD for short. Now, personal finance, we all know, is loaded with an alphabet soup of acronyms. But QCD is one you'll want to keep in mind, especially if you're approaching age 70 and a half or you're over age 70 and a half. At Brandywine Oak, we help our clients maximize their philanthropic goals in an ongoing effort to disinherit Uncle Sam. In the last 15 years working with wealthy families, I've never had a family say to me, Michael, my charity of choice is actually the federal government. It's never happened. Let's start with the basics. A qualified charitable distribution is a direct transfer of dollars from your IRA to a qualified charity. Now, what makes this method so appealing is it allows individuals who have attained age 70 and a half to donate up to $100,000 annually from their IRA without it counting as taxable income at all. The $100,000, by the way, is now indexed for inflation after a recent tax law change. In 2024, the limit was increased to $105,000. Here's how it works in real life. I'm 75 years old. I look good for my age. I'm required to take $100,000 out of my IRA and pay tax on $100,000. I also give $10,000 a year to my local United Way. Instead of giving the $10,000 out of my checking account, I instead instruct Fidelity to write a check for $10,000 to the United Way from my Fidelity IRA. I then tell my tax preparer about this. And what was the outcome? Only $90,000 of my IRA is taxable. So what makes this so powerful? Well, for starters, the majority of taxpayers do not itemize their deductions. So the $10,000 I was giving to charity did not give me any tax savings at all if I took the standard deduction. If the $10,000 was given via QCD, and I'm in a 30% tax bracket, including state taxes, switching my donation from my checking account to my IRA just gave me $3,000 of hard dollar tax savings. Furthermore, wealthy seniors over age 65 know and hate how much their income impacts how much extra they have to pay for Medicare Part B and D premiums. They're in a penalty box. I know it's a privilege, but it's also something that frustrates a lot of our clients. By doing a QCD, this also helps reduce their modified adjusted gross income, thereby potentially reducing your Medicare premiums. In addition, making charitable donations through QCDs after 70 and a half, but before your IRA mandatory distributions begin, can really help reduce the size of your pre-tax IRA dollars. By doing this, it'll reduce the size of your mandatory IRA distributions throughout retirement. It is truly a win-win situation. It's a win for you in terms of tax and potentially Medicare savings, and a win for the charities that you care about the most. Now remember, there are a couple of rules and limitations to keep in mind. For instance, QCDs cannot be made to donor-advised funds. So many of our clients have Fidelity donor-advised funds, Fidelity charitable accounts, if you will. You cannot give your IRA dollars directly to a donor-advised fund. It's also important to keep in mind the charity you're giving to qualifies under the IRS guidelines as a legitimate 501c3. For example, it cannot be a GoFundMe campaign for a friend or family member. Before you initiate a QCD, it's always a good idea to consult with your team of financial and tax professionals to ensure that you're making the most of this charitable giving strategy.